Hey everybody, it's Doug Schauf with RE/MAX Oceanside and MakeMaineYourHome.com. In this week's episode of the Make Maine Your Home podcast, I sat down with Vicki Kennedy, who's the owner of my office here at RE/MAX Oceanside, and Casey Hamlin with NorthPoint Mortgage. The three of us discussed 7 ways to make your offer more attractive. So if you're a buyer looking for a property in this type of market where things sell so quickly and there's normally multiple bids, this is a very valuable podcast to show you how to make your offer more attractive. So let's do this. Hey everybody, I'm here with Vicki Kennedy and Casey Hamlin. Everybody knows Casey Hamlin with NorthPoint Mortgage. He's been on the podcast a few times. Vicki, this is her first time on the podcast, and Vicki's the owner of RE/MAX Oceanside. So I'm excited to have Vicki here because she's the owner. When I got my license, what has it been, 8, 9 years?
No.
7, 8 years ago?
7.
7 years ago? 7 years ago. This was the office that I came to right away. You know, I've been here all along. Vicki's really took me under the wing, kind of made me a success that I am now. So I owe a lot of credit to Vicki. So that's it. You know, I'm really excited to have you. So thanks for sitting in with us.
Thanks for having me.
All right. So this episode, we're going to talk about making your offer as attractive as possible. So if you're a buyer out there, you're noticing now that the market is extremely hot. Homes sell quickly. You've heard me talk about that a lot. So we've come up with 7 ways to make your offer more attractive. First thing is you use a local lender. Get a pre-approval. Get yourself pre-approved. That's number 2. Number 3 is we'll talk about putting your best foot forward and like an escalation clause, and I'll explain what that is in a minute. Number 4 is like your earnest money deposits and how you can work that to make it more attractive. 5 is the inspection period and what you can do to finesse that to make it look more attractive. Number 6 is writing a letter to the seller, and we'll explain like how to do that and what to say, all that stuff. And then lastly, we'll talk about how quickly you can close and work with the seller's time frame. So those are the 7 ways to make your offer more attractive, but we'll talk about each one now. And we'll start with Casey's because the first one is work with a local lender, and you're my local lender. So, how does being local like just help the offer in general? I mean, what are some things that you can do that the national organizations can't?
That's a great question. Well, I think one of the biggest things is that if you're a seller out there and you want to have some confidence that the transaction is going to get closed, right? First and foremost. And so if your real estate agent that represents you has had a lot of transactions with the lender that's working with the buyer, then I think that gives your realtor and the seller some confidence that the transaction is not only going to go as planned, but also that's going to go smoothly. Mm-hmm. So I think that because it's a relationship business, that working with local lenders, that can have a major impact. If you think about it like this, from a local lending standpoint, we depend on Vicki, you, to refer business to us. So if we screw up and that doesn't happen, then all of a sudden we don't work with you anymore. Right. And we wouldn't, so I can't think of, or I can't say the same for a national lender. I don't feel like they have the same obligation or maybe the same pressure versus a local lender because of that.
That's a good point, yeah, because both Vicki and I work with sellers as well, so we work with both, so we've been on both sides. And I got to say, when I'm in a multiple bid on the listing side, and you'll probably agree, like if there's a multiple offers and one of them's working with like you or somebody we know, and one of them's working with a national bank, we don't know who the heck they are.
Or Rocket Loans or something.
Right, yeah. Something like that, where like, hey, let's side towards that one. And I think, the sellers would do that too. So that's a great point.
Right.
Yeah.
A couple other things that I would mention that go along with that is, I think that you're going to approach getting pre-approved versus pre-qualified, which is, a huge thing. Pre-approved is basically provided all the paperwork to the lender in addition to just information, and that can really take a lot of the guessing game out of an application once they go live. All right, and it really makes the whole transaction more bulletproof.
Right.
And so when it says pre-approval, hopefully that would add to the strength of the offer for the buyer.
It's a good point. So yeah, number two, pre-qualified versus pre-approval, or just pre-approval in general. But because I know some of these, again, going back to like the National Bank, like you can just fill things out on a computer and get some standard letter. Why don't you talk briefly on what is a pre-approval? Like, what do you look at? Like, let's say buyer walked in the door right now and said, Casey, I want to buy a house.
Right.
What would you kind of say? Like, hey, come on in. Yeah. Like what kind of stuff do you need to obtain from them and all that?
Yeah. So real quickly, it's going to be a 2-year snapshot of your finances. So it's 2 years of tax returns and documents to support that, pay stubs, all of that. And there's a lot of things in there that, as a buyer, you might not think that could potentially be hiccups or anything like that in the financing, and it's my job as a lender to make sure that those don't become hiccups. So by getting that stuff up front, we prevent a lot of headaches down the road that can occur.
Right.
So that's why it's hard, and that's why it's important. And then pre-approval would come as a result of that.
Yeah, gotcha.
Versus just like pre-qualification.
Right. So you're really you're looking at the whole picture versus just like a credit score and stuff like that.
Definitely.
Okay.
Definitely. Because
Right.
it's like anything. You don't know what you don't know as a buyer. You don't know what the financing world will think of your application, even though you think you might be very straightforward. There might be some other things if you own other property or if you had a side job or something like that would play into that stuff.
Yeah, makes sense.
So,
Okay.
Overtime bonuses. all
overtime
that.
bonuses, side jobs. Maybe you have a hobby business on the side,
Right.
but it loses money at the end of the year. There's lots of different things that could come up that just kind of play into it.
Right.
Good point.
Yeah, and those things nobody would notice them if they're just filling out a form online or whatever and getting that pre-qualification, whatever it is.
Right,
Interesting.
exactly.
Okay.
So just to add to the local lender piece too, guys, is that like with local lender, we will call the listing agent on your behalf if you're in a multiple offer and just say, hey, I want you to know these guys have provided everything that we've asked them to provide. And so that way it can take a lot of the worry off the seller, always
Nice.
in a multiple offer situation.
Right. Yeah.
Hopefully make a difference in the way that their offers.
Right. And
Can't
chances are somebody like you're going to know that broker and kind of help
Yeah.
finesse that as well.
Right.
Awesome, man. That's a lot of great information. I appreciate that.
Sure.
So the next thing that we'll chat about is putting your best foot forward, doing an escalation clause. We'll probably both talk a little bit about this, but first off, I do want to say, if you're able to pay with cash, I mean, that's obviously king, unfortunately for you. But if you're paying with cash, you already have a major leg up. So I think this podcast is really more for, the people that are financing and trying to make it more
Right.
attractive.
Although, if you're paying cash, you want to prove it with the offer. You don't want to wait and make them guess.
Right. Yeah, that's a good point. If you are paying cash and you do have proof of funds right away, that helps. Yeah, that's a great point. And then you can also use some of these things that we're going to talk about to your advantage as well. But the majority of what we're talking about today are the people that are financing and need to really make their offer shine and try to win it over those cash buyers.
Right.
Because that's part of the problem. So what we're seeing happen a lot lately is what they call an escalation clause. I think it's more popular in other areas of the country. An escalation clause is, I'm just going to use round numbers. Like, let's say you're buying a house that's listed at $200,000. So you put in an offer at list price, $200,000, but you're going to say, we'll escalate, we'll pay $1,000 more than the highest offer up to $220,000. You know what I mean? So that's the basic idea of an escalation clause. What we're running to here in Maine, though, is it's not as popular. So a lot of sellers are kind of like, what is that? Why are you doing that? They might think it's a little weird, and so you really got to rely on the listing broker,
Right.
To explain it properly, right? Is that what you're seeing as well?
Right.
Yeah.
And for the listing broker to understand it,
Correct.
to be able to explain it, because some sellers feel like it's underhanded and they should just put their best foot forward.
Right.
Right up front.
Yeah, exactly. Like, I mean, when I've done escalation clauses, I really make sure that I'm on the phone with the listing broker, make sure they totally understand it.
Right.
And if not, I will adjust. I don't really like the escalation clause, to be honest with you, but a lot of people that are coming in from out of state are like,
Right.
this is how we're doing it. It's like, okay, let's do it. So, that's really what an escalation clause is. But the other side of this is putting your best foot forward. Really, I've said this a lot, was like, take the advice from the professionals, whether it's me, Vicki, or Casey. We know the market best. We're going to tell you, I'm sure you do the same, but it's like, when I run comps for people, I'm like, look, I just wouldn't go higher than this number.
Right.
Let's hope we can get it, and if not, don't feel bad about it.
Right. Because you don't want to overpay.
Right.
You don't know what the market's going to do. You don't know your situation. If you have to turn around and sell in a year, you don't want to be underwater already.
Exactly. Yeah, and that's a good point too. Like something else I talk to my buyers about are like, look, what's your plan with the house? Are you going to be here for 5 years, or is this going to be a place where you're raising a family for 20 years? Because that is a difference.
Right.
It's, if you're here for 20 years, it's not the end of the world to pay a little more. But if you're only here for 5 years, you got to be careful on that. So, but I like to advise my buyers to say, pick the highest price you're comfortable with and go for it. Go for the gold rather than using the escalation clause. So.
Well, in this market, I'm sorry, we're getting a lot of multiple offers, and you can assume that there's going to be.
Yeah.
And you may not know there are other offers that you're competing with.
Right.
So they don't have to tell us that. So you should put your best foot forward.
That's a great point. Absolutely. Yeah, totally.
And just to kind of add to that from a lending standpoint, with interest rates still being so low, that for every 1,000 that the buyer increases that price, they've only changed their monthly payment by $5 a month.
Oh, that's great. Yeah.
So
yeah.
it's like,
Good point.
you go up 10 grand, it's $50 a month, which is, it's money, but it certainly it's what's that, $10, $12 a week.
Right.
And more
Yeah.
affordable than most people understand.
Right, exactly. Well, yeah, at least somebody could quickly do it in their head, like when because everything's fast nowadays. They got to work
Right.
quick. So yeah, that's good info. Good. So that's number 3 to talk about that. So the fourth thing is about earnest money, and I'll bring Vicki in for this conversation. Earnest money isn't as important in the way the contracts are written now, but it's also, but a lot of people still look at it. So why don't you kind of explain
Right.
maybe what earnest money is, and what are some creative things that we can do to help that?
Sure. So an earnest deposit is, a check that the buyer provides upon contract or within so many days. That is like a good faith deposit, people call it, and that goes towards your closing costs or your down payment at closing.
Yeah. Okay.
But it kind of helps solidify how serious you are about a property.
Sure.
You don't want to put too much down though, because if there was a dispute and you had to go to court for some reason, you want to be able to hopefully go to small claims court, which is more expedited and not as involved.
Okay.
So,
yeah, gotcha.
The other option is to put down a portion of it prior to your inspections, and then once you're satisfied with how the inspections have come through, then you can add an additional deposit at that point.
Right. Okay. Yeah. Add a lot more at that point.
Yep.
Yeah. Sure. A lot of people ask me, especially on first-time home buyers, are like, how much earnest money should I put down? Like, is there a calculation or like a percentage of the sale or anything like that? What do you advise?
Right. I think that's common in other parts of the country. The big cities, New York, it's always like 10% or something like that.
Right.
Here, it really depends on the situation.
Yeah. Sure. Yeah. Yeah, I would. That's kind of what I say too. And like you were saying, the small claims thing. You don't have to make it this huge deposit. And earnest money deposits nowadays aren't even, the way the contracts are written. It's like most people know that nobody's losing it.
No.
I
mean, as long as we respond to inspection timeframes within the time frame we put down on the contract.
Right. Exactly. Okay. All right. So that one. Let's talk about inspections. I know you and I are on the same wavelength as far as this goes. And I got my initial here, so that's me.
Okay.
So, inspections, you can do full inspection, or you can waive the inspection, or you set a time frame. I would say the normal time frame here in Maine is 10 days, which is a business day. So that's 2 full weeks to inspect the house and evaluate it.
And get back to the seller with any negotiations and have full resolution.
Right, yeah, that's a good point. Yeah, you do have to have full resolution within that 10-day period. So you have all that time, and the way the contracts are written is you can back out of the contract for any time during that, for really whatever reason.
Right.
You know, you don't necessarily need to cite any reasons or anything like that. So from a seller's perspective, if you're doing this long drawn out inspection period, that's not very attractive. So I usually, I don't like waiving inspections. And
Right.
I don't think you do.
No, I don't either.
Right.
Unless you have a construction background and you can just really look at all the features and the systems and the structure like a certified inspector would,
Right.
it really isn't a smart thing to do.
Right, exactly. Or, I mean, sometimes sellers do like the pre-listing inspections, and I guess it depends on, you know, who did that pre-listing inspection.
Right.
You know, if I know them, I can maybe give them a call and, you know, do those types of things, you know, prior to putting in the offer.
Right.
You know, so it depends on that, but I don't like waiving them. What a strategy that I've used sometimes, though, is reduce it. You know, instead of 10 days, maybe do 5.
Sure.
And just say, hey, I'm going to call in some favors to get this done, you know,
Right.
and start calling my guy to get it in there. You know
Sure.
what I mean? So instead of 10, go down to 5 and just bang it out. And I think that makes it more attractive.
It does, because they're
Yeah.
taking the property off the market, essentially stop marketing it even though it's still listed.
Mhm.
Most buyers won't offer another offer if it's already under contract.
Right. Yeah, exactly. So,
And just to kind of add to that, there's some loan programs if they want to use the loan to fix up the house that
Oh, yeah.
do require some sort of inspection in the beginning.
Sure.
So it'd be important to work with the lender there and just say, hey, what are we going to do so that if it is a 5-day window, that we're all on the same page, because we don't want to. You know, you don't want the financing to have to cause you to make that a 10-day window if you didn't know about it.
oh, that's a good point.
Right.
Yeah, yeah.
Um,
Yeah, it's a good point.
The other thing too is, from a lender standpoint, something we can do is provide a made application letter to the buyer,
Okay.
to the seller on the buyer's behalf, and we can do that relatively quickly. One, if you need it within a day of going under contract, again, to show the seller the good faith of moving forward on the transaction.
That's a good point. Yeah, so you could definitely get that done within the inspection period. So that's all like, you know, to make the seller feel comfortable and all
Exactly.
Right, and
Yeah.
the made application letter is you diving deeper into their finances to make sure that they're,
Yeah, it's basically, hey, we've turned on the financing to move on this property and on this transaction to move it forward.
that. Mm-hmm.
And so it's the quicker we do that, you know, again, one less thing to worry about down the line.
Right. Yeah,
Right.
makes sense. Great. All right, so moving right along. Number 6, Vicki, will pull you in for this. You ready?
I'm ready.
Writing a letter to the seller.
Sure.
Like, and I'm talking about the buyer writing a letter to the seller, you know,
Right.
to all that, not necessarily us.
Right, no,
Yeah.
it should come from the buyer, and
Right.
it should be, you know, a letter that will help the buyer connect with the seller.
Right.
You know, you can talk about the features that pulled you into the house and attracted you to it.
Mhm.
Maybe it's the neighborhood that you see yourself living in. Explain why.
Right.
What you especially love about the property.
Yeah, so kind of like compliment the seller, say,
Exactly.
yeah, well, this is why we love it, sure.
Yeah.
And I mean, I've had some buyers like put photos in there, you know, I mean, we're talking
Yeah.
about hitting some emotional strings here if we can, right?
Right. We just had one this week,
Yeah.
and they weren't the highest offer, but it was the family's home for over 60 years, and they wanted someone that was going to come in and enjoy it and love it like they did,
Yeah.
and not just turn around, flip it, and make a profit.
Right. That's a good point, because this is one of these items that I look at like, this is where you got a chance to win people over and overcome that cash buyer.
Right.
You know, because
Right.
if you're in a multiple bid and there's like 7 offers, chances are one of them's cash. And to me, the only way to really get that done is with this. Not the only way,
I
but
agree.
you know what I mean?
It's
Yeah.
one of the good ones.
Right, because I've certainly had a lot of sellers that just say, "Oh, they really want this." Yeah, I got to give it
Yeah,
to them. Yeah, I'm sure we both have had that. I like that one. That's a good one.
Right.
So, last one.
Wow.
How about that, huh?
It was?
This is fun. No, we're coming up on the last one right now. Come on,
Okay,
don't
sorry.
get ahead of us.
I like you financing, I can't.
Yeah. Leave it to the numbers guy,
Right,
right?
leave it to the numbers guy.
7, Casey, 7.
Okay.
Okay.
Cool.
So the last one we'll chat about is like a quick close and or working with the seller's timeline.
Right.
You know.
Right.
I guess we'll talk about the seller's timeline, because sometimes a quick close isn't necessarily attractive.
Right.
You know.
Well, it's a good idea as a buyer agent to contact the listing agent and
Yep.
see what the sellers are looking for, and if they've got another property, if they're in a hurry, or if they want to wait through the end of school.
Yeah.
It's always helpful to know that
Right. Yeah, exactly. Yeah, to know their time frame and kind of adjust that way. But a lot of people are like, hey, I got to get this thing solved, you
Right.
know. And going back to the cash people, that's an unfortunate position for financing,
Right.
because it's like they could close like in days,
Right.
you know, if
Right.
needed. So I guess I'll bring you in a little bit.
Yeah.
I'm going to try not to put you on the spot here. But, you know, realistically, what do you think is the quickest, or what's a normal closing? Like everything seems to go smooth,
Yeah.
and you're able to get it done. And then maybe you can answer like, hey, somebody's really strangling you, so what's the fastest you can get it done?
Right.
Why don't you answer both of those?
Okay. All right, I'll do my best to do that. So typically, you know, again, it depends a lot on the market, right? Spring, summer, market's a lot busier. So all the resources that are used to get a transaction done are all kind of busier. So timeframes expand, right?
Yeah, sure.
Inspectors are busier.
Yep.
Appraisers are busier. Title companies are busier. Lenders are busier.
Yeah.
So if all those parties are required to get the transaction done, then it's harder to get them to do it quicker in those markets.
When everybody's
right?
busy, yeah, makes
So
sense.
to answer the question, you know, typically what we'd ask for is 30, 45 days in that window to close a transaction. You know, we just had one for an agent in your office. We just closed, I think it was, I want to say maybe this week. We closed in 3 weeks.
Oh, okay.
Which wasn't bad.
That's quick.
That's 15 business days.
Yeah.
You know, the quickest you could close a transaction legally with financing would be 10 days, because
I didn't even know that. There's a regulation on that?
there is. So there's a regulation from when they start their application to when their loan estimate is received, and essentially paperwork is received.
Right.
Yeah.
And then at the end, we have to send out a disclosure with all their numbers, and they have to receive that within a certain period before closing.
Oh, wow.
And
Okay.
if they don't, then it would affect their timeframes.
Right.
So
Yeah, push it out or whatever.
yeah. So essentially, the time frame is about 10 days. Is as quickly as you can do it.
Right. That seems super
Transaction,
fast.
which would be fast, but
for finance.
Right.
you know, but it goes back to, you know, local lenders. So if we have a relationship with appraisers that we send a lot of business with,
Mhm.
versus a national lender that the appraiser might get 1 or 2 orders from a year.
Sometimes I've had national lenders like ask me if I know any appraisers.
Or you get somebody from Bangor coming down to do
Right.
something in Portland,
Right.
you know, and that can, I mean, you're in a situation where you had multiple offers, you push up the price,
Yeah.
right? And you did everything you can do to get this deal under, and then if you have an appraiser that comes and doesn't know the market,
Right.
well, now we have an appraisal issue on a deal that should be, you know what I mean, should
Closing soon.
happen.
Yeah.
Yeah.
You know,
Sure.
so a lot of those factors go into as far as why a local lender and timeframes to close.
Yeah. Nice. Awesome. So basically what I heard is you can close every loan in 10 days.
I'm sure you edit that.
yeah, we'll try to cut that out, maybe. I'm just kidding. No, I think, I mean, whenever financing, I always try to write it up for that 30-day mark, like if we're in a hurry. I mean, you know, that's usually what you tell me is the fastest we can do, but I know there's those rare circumstances that,
Right.
you know, we can make things happen. So, that's it. That's
Covered
all set.
everything.
That covers anything. Anything else you guys can think of? I won't put you on the spot. I think we covered a lot of good
I
information.
think we
I think you
did.
did great. You know, I would mention though that with you, you know, it seems like what you've talked a lot about is for the buyers to be prepared.
Right.
Yes.
Right.
You know,
a great
the
point.
earlier they sit with you,
Yeah.
Right.
and you can go through all of this with them.
Yeah.
You know, if they're online looking and they find a house that they like and then they want to go make an offer tomorrow, it's hard to put all this stuff together. Isn't it?
Right. So hopefully they're
that's a
having
great
this
point.
conversation with their realtor up front.
Yes.
And their realtor's coaching them on what they need to have, and you know, just get ready.
Right.
Because you want to be able to move quickly when you find the house that you love.
Yeah.
And you don't want to have to be scrambling and miss the deadline.
That's a great point. Yeah, and working with a good team. I mean, that's why, you know, I partner with guys like Casey and other people that, you know, we're all on the same page. You know,
Yeah.
that's why we work together so well.
Well, and it goes to using an agent.
Yeah.
I mean, it really does.
Yeah.
And all this stuff is something that I don't think your average buyer out there would know,
Right.
you know, or be trained to know.
Right.
So,
Yeah, exactly. No, good point. Great. Well, hey, thanks, guys.
Thank you.
This was awesome.
Great, thank you.
Hey, hopefully this was helpful to all you. If you have any questions, comment below. I'll put Casey and Vicki's contact information in the description, so you're welcome to reach out to them. I'm assuming you guys would answer any questions if people reach out to you. And so thank you very much. And remember, if you're going to make Maine your home, you don't have to do it alone.